Good afternoon and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Today we're going behind the bell with our closing bell companies, Legg Global Asset Management and Western Asset Management. Joining me for this segment, we have Mark Lindbloom, who's a portfolio manager for Western Asset Management. Very exciting day to be at the MarketSite as you're ringing the closing bell, celebrating the launch of the first actively managed fixed income ETF. Tell us more about that. This is a Western Asset Total Return ETF, ticker WBND. You are the portfolio managing it for Legg Mason Funds.
Western Asset Management.
Got it.
Correct. Yeah, we're quite excited about the launch today. Western Asset's been doing this for over 40 years, and the ETF is yet another way to deliver to our clients broad-based fixed income solutions and portfolios. So we're very excited about the launch today.
What makes it different from other taxable fixed income ETFs in terms of it's actively managed?
We've always believed in active management. As I like to joke, there's not a passive bone in our bodies when it comes to managing fixed income portfolios. That's been how we've done it for 45 years. I think our key point on this is it doesn't make sense from an investor point of view to follow indices or to follow benchmarks that are governed by rising debt. So from a valuation point of view, we think that active management is the best way to go in managing fixed income portfolios in particular.
What client would be suitable for this particular ETF?
You know, both individuals as well as institutions. As you look at the investment process and the asset allocation process, most people are looking at their equities, but we do think that broad bond portfolios and ETFs are a necessary part of that broad asset allocation. So all types of investors we think should be invested in fixed income securities.
All right, well, we have you here today because this has been quite a volatile day in the markets, whether it's equity, FX, fixed income. Let's talk about your 2019 fixed income and macro outlook. Do you think that this more volatile environment is going to kind of be the way it is for 2019?
We do think the volatility will be somewhat higher next year than it has been this year for a variety of reasons. The keys for us, though, since we are talking about bonds, are growth and inflation and the Federal Reserve. On the growth side, we do think we'll see more moderate growth, probably closer to 2% than the 3% this year. The key, though, is that we strongly believe inflation will be lower in the first part of 2019. That should be a very, very good thing for bonds. And we do think the Federal Reserve will probably not raise rates as much as people have been forecasting recently as well.
Yeah, they definitely sounded more dovish over the past couple of weeks than they have in the past. Do you think that makes sense for them to kind of pull back a little bit considering the environment we're in right now?
Very much so. We've been concerned on the various things we've been hearing out of the Federal Reserve in the last, say, month and a half, that they may be making a mistake from a market and an economic point of view. So we were quite pleased to hear the latest comments come out of Mr. Powell and company.
Okay, Mark, thank you so much for joining us at MarketSite. And thank you for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.